Alrighty, it looks like we are all good to go here, which is fantastic. Welcome, guys, to another stream today, or another broadcast. All. I just I'm laughing at myself there. Let me just what I'm going to do right now, what I'm going to do today, guys, I'm going to be walking you through a lot of things. Today I'm going to be walking you through the Dow Jones. I'm going to be walking you through silver and gold. I'm going to be walking you through a pretty amazing setting up right now that could be getting ready for a big move to the upside. And I'll be talking about my short on the S&P 500, what I think about that. And also I'll be talking about Bitcoin as well in this. So I have a lot of things that I want to cover with today, guys. So let me just make sure that everything is set up properly here, that you guys can see me okay. Just give me a hi in the chat box and tell me where you're from, and we will get started in about 30 seconds, guys. 30 seconds. So just give me a hi in the chat box, tell me where you're from, and then we will get started. So all right, really looking forward to this. Let me just, all right, fantastic. All right, fantastic, guys, fantastic. So let me just make sure that everything is working on my end here. All right, we've been going for a couple of minutes here. We're going to get straight into... Guys, can you give me... love from India. Hey. Alrighty. So, you know what? Without further ado, it looks like everything is good to go. We are recording. We are broadcasting. We are good to go. All right, guys. Fantastic. Right. Hey, Lane. Let me just bring up, guys... where are we here? Let me bring up the typical disclaimer. Guys, do not place a trade based on what you're seeing in this session today. Trading is risky, and it can cause substantial financial loss. There is no guarantees of making money in the markets, and it takes you a long time to become a good, consistent, good trader in the markets. So be smart about the way that you're trading. Also, guys, if you haven't done so yet, make sure you head over to mastertraderlab.com. mastertraderlab.com to grab your free trial if you haven't done so already. Plus, I'm also giving away all these cool bonuses as a free welcome gift as well too. So head over to mastertraderlab.com right now to grab your free trial, and also grab all those free bonuses as well too. Let's get straight into the markets today. Right. I'm excited about the markets today, guys. Like, I really am. And the reason why is because it's I'm really excited. So let me just see if I can bring up this main point here, this main one here. And the reason why I'm really excited about what's going on today in the markets is because it's flowing along with exactly what I thought how things were going to plan, how things were going to happen, and how things are going to plan out in the markets there. Now, firstly, let me go straight into what's happening right now with the indices. Okay, so the Dow Jones, S&P 500, and all that sort of stuff. So the Dow Jones right now, same with the S&P and same with a lot of the indices right now. Right now, the markets have had a bit of a pullback. The S&P has had a bit of a pullback through here. We're still forming this big head and shoulder formation. But what's happening right now on the S&P 500 and the Dow, the indices right now, that is you can see that that we have had this big drop down, and now we're getting a bit of a bounce through here. This bounce is likely to be short-lived. We've got a very strong trending down, and now we're just rallying. We're having a little bit of a rally back to the upside. As you can see, after that big move to the upside, which was this day right here, if I go to the Dow Jones, you can see this was the big up day through here, but look how weak that's been. So we had this nice sort of, if you have a look at the actual market itself, right, you can see how you had this entire sort of section through here, how that was it was just going sideways, and now we've just broken out. We came back down, and then now we had this bottom through here, and now we and now we're having a little bit of a rally to the upside. So So it's so important, guys. And yeah, so it's so important to see what's really going on right now. And so as we can see, we've had a bit of a drop down. So on the Dow Jones, to me, this is just another bit of this is a bear market rally, and this is now getting ready to have a bit of a drop to the downside once again. Now we don't know how short this is, but if you see on the Dow Jones, remember we just broke out of, and it's so important to sort of see this. We just broke out of this sideways range through here, all this here, and now we've just broken out. So if we're looking at that there, we can see on the Dow Jones, we have a lot of resistance all through this level through here right now. We had a big drop down, had a bit of a rally up. We had a little bit of a support where we are right now. But when I'm looking at my charts, and if I go to my weekly charts here, I don't have any long-term support level until it gets back down to around about the 20, maybe 21, which is my long-term trend line through here. So I see the Dow Jones getting down to around about that 20,000 level, and then we're probably likely to hold here, and then start to roll over, and then we're probably likely to head back down towards the 20 level, and then we're probably going to we're probably likely to get a bit of a bounce through here. But the thing is, guys, is that if this was a bit of an end of trend type of move, meaning this entire move since September being down, if this was an end of trend indicator, you would get capitulation, right? We didn't get capitulation on the downside yet. Capitulation is like 1,000 point down day, you know what I mean? Like that's when you get capitulation, maybe even a lot bigger than that. When that happens, you know that we're likely to start to see a lot more upside to come out of that, or at least a bit of a bounce. So we've got a bit of a bounce through here right now. Again, that's just expected. The markets don't go straight down. So, and no, the bottom is not in the markets right now. We've just come out of this massive sideways range for quite some time, and now we're just breaking out. So it's, to me right now, guys, by looking at this and by looking at the indices right now, there is nothing bullish, or so there's nothing bullish about this. It's all bearish. And once again, look at this big move down here. Look at the psychology of the sellers. Look how strong they were, and then we've had this little rally up. If you had to look at both legs through here, right? You had this leg down and then a leg back up. If you had to have a look at both of those legs, which one would you say, when you're looking at the strength of the move, which one is stronger? Obviously sellers, right? Again, right now as I speak, as things fold, the story continues and or changes and so on and so forth. Makes sense? So right now, when you're looking at the last two legs, this selling leg and the buying leg, right now as I speak, the sellers are so much more dominant in the markets, and we're now likely to create a high, lower high, create some sort of lower high through here, which is major resistance, and then we're now likely to roll back down, head back down to around about, say, 20,000, and then get a bit of a bounce and so on and so forth. That's when you're probably going to start to see things happening with the Fed. Maybe they're going to cut interest rates then. I don't know what's likely to happen through there, but this is just the first move down, and this is the first move down. We're now getting ready for another move down. And we're going to get ready to move down to around about my long-term trend line. Now, depending on what chart I'm looking at, that's between the 20 and the 21 through there. So that's what I'm seeing there right now, guys. And so that's right now, is this the bottom in the markets? It's definitely, to me, it's definitely not showing that right now. As I see right now, we're getting ready for another rollback over and a rollback down. So that's what I'm seeing right now on the overall indices. Now, let me get into, I want to talk about my short position. So I've actually got a short position. I've been short now for quite some time, actually. I got short back up here. I got short on the S&P 500. Meaning I bought put options here, okay? So I had someone here, Trent, I had someone say, you must be sweating bullets right now about your short position. Firstly, no, because firstly, I have plenty of time in my option. I have like another at least 2 months left, so I knew this was going to take a bit of time. But also, secondly, I'm trading with the trend, so I'm not fighting it. And thirdly, I knew where we are in the markets right now. So I definitely not sweating bullets. And on top of all of that, one, I am expecting to see I am expecting to see this market to hold here. It might even rally up a little bit more, but then ultimately over the next couple of months to head back down, just like the Dow Jones, like I shared, just like the Dow Jones is likely to do as well too, and drag this down. Once we get that, that's exactly what I'm looking for, to see a bit of capitulation in the markets, and then we'll likely get a bit of a bounce and so on and so forth there. So for my short position, I'm not sweating bullets because I'm trading with the trend. And on top of all of that, this is the biggest thing to your trading, guys. If I lose 100%, of this trade here, mean my option goes to expires worthless. Do you know I've only lost around 5% of my entire account? So it doesn't matter what happens with this one trade. That for me personally, when I do trade, I don't risk a lot, but the trades that I do get in can give me 100%, 2, 3, 4, 500% return. That's how I can get a good 10, 20% return on my account in one trade by only risking 5%, sometimes even less than that, in the markets. So I hope you can see that the way that I trade the markets is that I don't sweat bullets on any trade. I don't care if the whole thing expires worthless, because I could be right one trade out of 4 and still do really, really well. So I hope you can understand. Like for me, I don't get emotional about this sort of stuff because I know my risk in the markets and where I'm at right now. So that's where I am right now on my short position there. I hope that all makes sense with that there. So what I want to talk about right now, guys, I want to talk about gold. Let's have a look at gold right now. And let me share with you what I'm seeing right now, what's happening with gold in the markets. Gold right now on the short term is having a bit of a rise, right? Don't worry about my data. My data had a bit of a caca. That's a technical term, by the way. A caca. Don't mind me, guys. I just came back from the gym, so I'm feeling really good. So this data here is it called a caca. So forget that data there. So what I'm looking at right now when I'm looking at gold is actually starting to get a bit of a rise, isn't it? We're getting a nice rise out of this here when we're looking at gold. So we're getting a nice rise, and we're starting to get some sort of a trend, aren't we? We really are. We're starting to get some sort of trend in place. We're getting this nice little move up through here. We've had this sort of nice move through here. We're breaking out. Now we're starting to get a nice move up through here. So on the short term, what we're looking at right now is we're looking at that gold is rallying up, right? That's what's happening right now. And it could be forming some sort of bottoming pattern through here. Okay, but the most important part when you're looking at gold right now is that did gold just make a bottom and are we changing trend? Is the most important part is to go have a look at your weekly chart. So let's go over and have a look at our weekly charts through here. So when we're looking at our weekly chart through here, you can see that with the overall market and what's actually going on right now with the markets. You can see that firstly, if we have a look at what's going on, if I squeeze my chart up, I can see that by looking at this long-term weekly chart that we actually have this move down through here. All right, this move down through here, and so you can see this overall long-term trend line is definitely sloping down through here. We also can see what can we also see? We also see that we've actually had a big major breakout of this level through here. So it's actually getting pretty close to that level right now where we are right now in the markets there. So right about there is where the entire resistance is. And on top of all that, this is the last significant low. We just made a lower low. So this could be some sort of lower high. There hasn't been a change in trend yet in the markets. This whole thing could be some sort of bottoming pattern before we actually explode to the upside and we break out. That could happen in the markets. But what you want to do, guys, you want to think about probabilities, and that actually hasn't happened yet in the market. So for me personally, if I'm looking to go long gold, I want to see this thing start to get up. I'd rather wait, because if this is there's still a high probability chance that this could start to do this here. Now, people say, oh, that's not going to happen, John. We don't know, right? I don't know. You don't know. What I'm talking about is for me personally, when I'm trying to trade the markets, is I'm trading probability. So for me, the probability is that I want to see this market break up and break out of this thing level through here, and then come back down and give me some sort of entry, or it might rally up and then give me a bit of sideways movement and then give me a nice entry trade on the daily chart. It might be something like that, and then a nice breakout, and then I'll get on something like that. But again, I need to have my setup there and so on and so forth. But I would rather wait for something like that to say now there's a much more high probability that this was a bottom in the markets. I didn't care about picking bottoms. All I care about is having a high probability trade. That's all I care about. And picking bottoms is never a high probability trade. Okay, and we see all of that throughout 2018 through with the cryptocurrencies. People try to do that. Then that weekly chart, right? And we saw Bitcoin. What did Bitcoin do? I'll talk about Bitcoin in a minute, but Bitcoin just kept rising, right? And then kept getting hammered big time. So right now, for me personally, I want a strong probability. If I want to start to put some good coin into this, into gold, I want to start to see gold start to bottom out and start to get back above these lines through here to show me that this was just a bit of a fake out to the downside, and now we're changing trend. I would rather miss out on this here. I would rather miss out on this bit through here, and wait for the market to tell me that it's changing, and then once it actually does do that, and then capitalize on this here. I would, right now we have a very high probability chance that this is going to happen. I want to be in a situation where we have a very high probability chance that this is going to happen based on what the charts are telling me, nothing else, what the market's telling me, because I have no idea, you have no idea what's going to happen, right? So we can never try and predict the market. And right now, this still could be some sort of lower high in the markets because we had a big rally back down and a rally back up. We're still on the underlying direction of this trend through here, and we created a lower low. So remember, that lower low is an indication that we're getting a change in trend. Let me go over and share with you exactly. I'll share with you exactly this exact same thing on the transports. What do we get through here? The lower low. This low, lower low, then followed by a lower high, and then the market sold off. This lower low is a warning sign to be careful about trying to go short or trying to buy this market right now. We may get a bit of a rally, but that lower low tells me that the buyers are no longer raising their prices, lowering their prices, which means buyers are not lowering. All we need now for a change in trend, right, is a lower high, rallied up, and then rallied back down. So for me personally, by looking at gold right now, it definitely hasn't changed. It definitely hasn't changed that trend. So yes, on the short term, we're getting a little bit of a rise through here, and it may continue up. Short term, obviously, you can have a short term trading system and so on and so forth. But for me, looking for a bit more of an investing position, I mean, I'm looking for something to hold on for a couple of years or so. I want to see that weekly chart turn around. I want to see that weekly trend turn around because I always want to be trading with that weekly trend. The weekly trend is key. Now let me talk about silver here. Silver is also another one that I'm seeing a lot of people talking about right now. What ended up happening through here? We had a lot of sideways movement, and once again, don't worry about this level through here. That's what you call caca, which means the data didn't come through for those days. But we had this sideways movement through here, didn't we? We had all this sideways movement, and now we're breaking out on the upside. Is this a change in trend? Have we now bottomed out into the upside? I don't know. You don't know. Let's go to the market and let's see what the market is actually telling us about what's going on right now in this here. So I'm going to go back to silver. I'm going to go back to the long-term charts. And as you can see, that even though we're getting a bit of a rally back to the upside right now, we still have a very, very strong downward trend through here. And this could be some sort of a rally before it holds and then rallies back down. It may do that. It may do that. So for me personally, if I'm looking to get into some sort of a silver position and I want to start to trade silver, I want to get into some silver position, I want to start to see this market. I want to see this market tell me that the overall trend is changed. What do I need for that? See, a lot of people want to try to get into here, want to try and buy silver right now, for like long term, and they're trying to pick a bottom right now. You may be right and you may be wrong, but the market hasn't changed. Market hasn't told you that we're turning around yet. So by looking at the silver market right now, I would rather miss out on that bottoming pattern to give me a lot more of a high probability trade, wait for the market to start doing something like this, where the market rallies up, gives me a nice little breakout. I'd rather the market do that, and then it's probably going to come back down and step up. Most people, when they're trading the markets, they don't want to wait for that because they think the market's just going to do that. Now that can happen. Probably 5% of the time it does happen, and 95% of the time you get a nice little stair step, just like we did back here, right? Higher, low, and then silver took off. So I want to wait for the market to tell me that, and then once we get this sort of pattern, then we have a high probability chance of this thing now going and now me capturing a nice move back to the upside. But right now, it's not telling me that. I need to wait for the market to tell me that we're definitely not in a downtrend. And right now, as I speak, let me do this here. Right now, as I speak, we've got, what do we have here in silver? We have lower high, lower high, lower high. There could be some sort of lower high here right now. And if you're saying, no, it's definitely not going to be, well, guess what? Your ego is telling you that you definitely know what's going to happen, and you never know what's going to happen, especially if that chart is telling you right now that we are still in a downward trend and we're just getting some sort of a rally to the upside. This could be short-lived before we go for another run to the downside. That is still a possibility because the market is still going down. Once the trend changes and if the market does start to do this, that's when I'm going to start to say, you know what? Something to think about. So that's what I'm seeing there on the silver market. What I want to talk about right now, guys, I want to talk to you about an awesome setup that's happening right now in the markets, and an amazing setup that's happening right now that could be getting ready for a really big move. And that is, drum roll, GDXJ. I've been doing my analysis today as I was watching the close of the market. I was doing all my analysis, looking at all the indices and the stocks and all that sort of stuff that I normally do when I'm doing my trading. And I started looking at this GDXJ and I thought, oh my goodness, can you see what I see? And I'm like, oh my goodness, I cannot believe this. This is just absolutely just awesome. Here is what I'm looking at here, guys. If you go back and look at my Bitcoin trades, okay, my Bitcoin videos for the last few months, as I'm doing this video here for you, or this session here for you, I was talking about how there was a calm before the storm in Bitcoin, and how when the calm before the storm simply means when it goes really quiet for a long time, and then we get a breakout, that's when things are likely to go ballistic, right? And that's exactly what happened with Bitcoin. I shorted Bitcoin, and I'm out of Bitcoin now. I made a really nice profit to trade. 80% of that move down I captured. I didn't capture all of it, but I captured 80% of it. Really nice profit to trade. Made some really good coin on that. Next. Now, what I'm looking at here is I'm looking at the exact same thing. Now, I'm not telling you that it's going to do the exact same thing, but what I'm looking at right now on the GDX is the exact same setup as what I saw in Bitcoin. Bitcoin was short, GDXJ bullish. Something to think about, right? Because look at all of this sideways movement through here. This is now going into 2 years of sideways movement. Guys, when we start to hear the calm before the storm, that's what it means, right? When you hear that analogy, what does that mean? It means when the market goes really quiet. The analogy is when it's really quiet, it's a calm before the storm. And when it does break, it's either break. Now, Bitcoin, there's a high probability that Bitcoin was going to break down. And when it did, that was actually a trade set up for me. And then I wrote that thing down. Beautiful trade. What I'm looking at here on the GDXJ is that if we start to get a break up and out of this level through here right now, then there's a very good chance we're likely to start to see a nice couple of year run, or depending on the velocity. That's a technical term from Gann. Velocity in the markets, which means how fast it moves up. When this starts to break out, we're now likely to see, if it moves up really quickly, it could be 6 months move. If it moves up very slowly, which means it goes up and we have a bit of a pullback, goes up, we have a bit of a pullback, and so on and so forth. We don't know how it's likely to happen, but when it does break out, we're now likely to see. So if we have a big velocity move, it could be 3 to 6 months. If we have a like sort of natural gas move, right? Boom, like that. We don't know if that's going to happen or not. Or it could be just slowly moved up. If you have a look at gold, did the exact same thing a while ago, right? It actually went sideways for quite some time, and then it broke out, and then it went down for 6 months. But it slowly went down. It went down a little bit, and then it stair-stepped and went down a little bit, stair-step, down a little bit, stair-step, down a little bit. But it was after this sideways movement, then we'll likely to start seeing this thing, move to the upside and start to crush it, rock out with your socks out. So this is an amazing setup that's setting up right now. That's in my view of potentially of what's likely to happen. And this is the calm before the storm in this session through here. So there's a little bit of a gift for you guys. There's no guarantees that that's going to be a profitable trade. So always have good risk management on every single trade, guys. Doesn't matter what trade it doesn't matter if I think the thing is almost a certain trade. I always have really good risk management on those there. Alrighty, guys. So what I want to look at right now is I want to give you guys a bit of a Bitcoin update. And I will go to that and I will share with you what I see happening. What's going on Bitcoin right now? Have we bottomed out on Bitcoin? What's happening with Bitcoin right now and how we're moving forward and all that sort of stuff. And let me just share with you exactly what I'm seeing through there. And as I'm bringing this up, guys, bit of a shameless plug for my membership. Go to mastertraderlab.com for your free trial to my membership. And plus a whole bunch of bonuses. Let me bring up Bitcoin right now. Let me bring up Bitcoin right now, and let me bring this over here. And we're going to look at Bitcoin as I am doing this for you. Let me go through to this one through here. Okay, so now we're looking at, this is the 15-minute chart. Let's go to the daily chart and let's see what's actually been going on right now with Bitcoin. Okay, now firstly, what's been going on with Bitcoin right now? We actually went this here was this here is what I called before. This here was the calm, and then this here was the storm. Okay, so when this started to break out, I jumped on that thing, and that's basically what I got out of it as well too. So that's basically, and then I got out of it anyway. So we've had a big drop down through here, a little bit of an upside, and then the market continued down through here. So what's happening right now is that the market is still trending lower. Okay, we're still getting this lower low. And we're still getting on this weekly chart right now on Bitcoin. We're still getting lower lows. So this could be some sort of a sideways movement before we get ready for a breakdown, another breakdown. It could be getting ready for another breakdown. It might not be. But just remember, guys, if you're looking at any of any investment as more of a longer term investing position, mean you're not trading it. Trading it is when you're getting in and getting out in a few weeks, maybe a few months. If you're investing in it, meaning you have like a couple of year view, you especially need to wait for the market to get into it. And don't be listening to this absolute BS hype out there that we're going to get a vertical spike out of this thing, just like that overnight, and we better get in right now. It just doesn't happen. I see so many, not going to name people, but people have always been saying we're going to get a vertical spike out of silver, gold, and Bitcoin. We just don't get a vertical spike in the market. That's not how the markets work. Now, yes, we can get a vertical spike if we see certain setups, like Bitcoin and so on and so forth, and a big move up. But what's more than likely going to happen is we're going to start to change trend and start to move to the upside. But right now, lower high, lower high, lower high. We've broken down. We went sideways through here. This could be getting ready for another move down on that weekly chart. So please do not be fighting that weekly chart. And also, by looking at this daily chart, by looking at the daily chart right now, what are we seeing through here? Now, this is completely different. This is completely different what I've just said just a minute ago, because look at this here. We had a move down and sideways, and then we've had a move down. We've had a strong move up, and now we're getting this move through here. So when we're looking at this here, the short term is actually getting a bit of a, again, I definitely wouldn't want to be buying Bitcoin right now because I'm going against that higher time frame trend. But right now, when I'm looking at Bitcoin, what's happening with Bitcoin? We actually could be getting, if we get a bit of a breakout, we could be getting some sort of a short term, not a massive bottoming pattern, by the way. Wait for that weekly chart to tell you that. But this could be some sort of a short-term bounce in Bitcoin. Now, this is the short-term daily chart. What I just shared with you on the weekly chart, this is the daily chart here. The weekly chart is still saying that. So just because the weekly chart is going down, guys, doesn't mean we're not going to get some short-term rallies on that daily chart. Okay, I hope you can understand that. So what we're looking at right now on the daily chart is that if we get to some sort of a breakup, and especially out of here, then this could be some sort of this could be some sort of head and shoulder pattern, shoulder, head, shoulder, and then a breakout, and then we could be getting ready for a little bit of a run to the upside. So that's what could be happening right now. Could be happening. But once again, if we hold here and then we get a breakdown like that, well then guess what? We're probably likely to head back down and continue breaking to new lows. So we don't know where it's going to break out, but wherever it does break, we're likely to see a little bit of a short-term move in either direction. That's what I'm seeing on the daily chart, but that weekly chart, again, I definitely wouldn't want to be trying to fight that market. So there we go, guys. So that's a little bit of an update, a little bit of a recap for you guys. Let me go now. If you have any questions, put them in the chat box, and I'll be gladly to help you out with the questions here. Let me go through the questions. Trump D. Hey, Trump. You lost in Netflix, did you? Okay. Netflix is a casino stock. Not really. Not really. I think you just got to know how to trade it properly. That's all. I'm not sure what made you. I'm not sure what made you go. I'm not sure what made you get into Netflix. Not sure what made you get into it, buy it, short it, whatever, Trump. But yeah, it's you've just got to. If you're trading any stock out there, if you're trading Netflix or you're trading any market out there, then one, you got to have good risk management, and two, you got to have a good plan of the reason why you're getting into any stocks out there. So have a good plan. Okay, so what do we have here? Look at the volume. D. Mitch. Yes. D. Mitch, you're talking about the volume here. So you said look at that volume on the S&P chart, and so yeah, definitely. So when we're looking at the volume on any chart, guys, what tends to happen is we tend to start to get volume spikes either on expiration day, options expiration day, or either tops and bottoms, short-term tops and bottoms in the market, especially when we're looking at the daily chart, right? Look at this here. Look at this here for a minute. So when we have here, when you're trying to read the volume, this is how you read it. So let me do this here. So if you look at this here, so we had volume spikes through here, and that was that point through there. Then we rallied up, had a volume spike through there. That was the top through there. We kept going down, volume spike through there, and there's a volume spike through there. So right now, and then this could have a little bit more of a sideways movement for a while, and then drop back down. We don't know, but it's telling us on the short term anyway. On the short term, it's not always the exact same, but at tops and bottoms, okay, when we're looking at the daily chart, it gives us that short-term probability that we're now likely to get some sort of a change in a sort of a short-term reversal. So now you need to make sure that you're also incorporating trend analysis, so higher, low. Market is pulling back. We've got a cluster of volume, and the market took off. As the market took off, then we started getting sideways movement, and then so on and so forth. So that's how you read the volume when you're looking at any stock in the thread. Now, it doesn't mean it's going to be a complete bottom in the markets. Again, you need to do your analysis properly. But right now, the reason why we had a bit of as you can see, why we had a bit of a bounce in the markets is because we had a bit of a volume spike here, and then we have a bit of a bounce. But yeah, the volume is definitely key. But when you start to see this rally, look at this rally here. And we've had very, very, very little volume through there. So that's how you read the volume, guys. If you're looking at any market or any stock through there, it can give you some sort of, again, it's a short term. It's not complete trend change. You need to apply the analysis of who's in control and so on and so forth. But on the volume can definitely give you some sort of change in the volume can tell you when we're likely to see possibly an end of move indicator. Again, short-term end of move. And as we just see from there, yeah. So, bulls are gonna make bank, bruh. Hey Trent, you know what, Trent, my man, you are my #1 favorite troll. You know that? I deliberately not block your ass because you are my #1 favorite troll. I salute you, my man. I laugh at everything you say. When the market's going down, Trent buys it. When the market's going up, Trent shorts it. You're my contrarian indicator, Brent. Just tell me what, Trent. Tell me what you're doing, man. I could do the complete opposite. Maybe close the gap on your chart before going down. I follow you, but up naked charts and just share your opinions and expect people to pay thousands of dollars for your courses. I didn't understand that. I follow you, put up naked charts and just share your opinions and expect people to pay. Hey, well, if people want my courses and my education, they're going to pay for it. Simple as that, D. And the thing is that when you're saying you look at naked charts, do you realize, D. Mitch, that the naked chart itself is the most important thing about trading? That tells me that you still have this theory that, oh, well, I need to have all this shit on my charts to read this chart properly. I need to have all these indicators on this chart to tell me that how to read this chart. I need to have all this crap on the charts. I need to have all the trend lines. I need to have all this sort of stuff to be able to read the market properly. Your belief in that is that you think you need to have all that stuff in the market to be able to read the market properly, which is absolutely totally false. In fact, all that other stuff is going to confuse you even more. The truth are in the charts, not in the indicators. The indicators can be a confirmation tool, but yeah. And the thing is, Mitch, is you don't realize I put out so much education and I teach you how to read the market properly. It's not a matter of just putting up a naked chart and it's like, oh, well, then I'm going to give you this secret indicator. That's total BS. No, there is no indicator out there. The chart itself is the most important thing. The chart is the truth. Nothing else out there. I hope you can understand that. All right. USD/TRI is also forming a similar pattern to GDX. Fantastic, DB for life. Fantastic. Please check USD/TRY. All right, let me see USD/TRY. Oh, that's YSD. USD/TRY. You make me laugh, Marcus. I could no, definitely not. DB for life. So you're saying USD/TRY is very, very similar pattern to that there. I'm looking at I'm looking at, that's definitely not DB for life. If you're looking at the same sort of pattern, are you talking about right now DB for life, or are you talking about in the past with the same pattern with the GDX? Because what I'm looking at right now, when you're trying to compare apples to apples, I'm not sure where you're looking at that, or what you're focusing on there when you're trying to focus on the chart there. So if you can let me know that, if you're talking about right now or you're talking about in the past, because when I'm looking at this market right now, when I'm looking at this here, we have a small bit of a sideways movement here, maybe for a couple of months, but it's not really the same thing as looking at that GDXJ chart. When I talk about the calm before the storm, when I talk about that, the GDXJ on that weekly chart, when I squeeze my chart up, has been going sideways for a couple of years. So it's a completely different sort of setup through there. Now again, when you open your chart up, it does look a bit volatile, but you can see what I'm looking at through there. So I hope that makes sense. All right, so this is actually one of the biggest myths that I see out there is that if the stock market will not perform for the next 10 years, then we should start trading in Forex or commodities. That's not necessarily true because there's always a bull market in some sector, right? It could be the agriculture. It could be mining stocks. It could be silver and gold. You know what I mean? Like just because the indices are going down, this is one of the biggest things that stops people from getting ahead of the markets is that they think because the S&P 500, all that sort of stuff's going down, then nothing's going to go up, you know, and that's simply not true. Yes, you can trade Forex and commodities, but just because the indices are going down doesn't mean all stocks are going to go down. You know, you have sectors through there. If the S&P and the Dow Jones start to go down a lot, well, then we could see a mining boom. You know what I mean? The mining stocks might go through another big bull run. You just never know. Makes sense? And if you're trading the market, you're trading the market, you're going to get in and out on the short term, maybe for a few days, or maybe for a week or two, then it doesn't matter about that, right? Because if the market goes down for a little bit, the rallies could last a few months. We could have a nice big drop down and then a rally and a pullback that could last a few months. So the indices don't represent the actual stocks itself. The stocks form their own patterns and do their own thing, which simply means is that Nasdaq doesn't represent what's happening with Apple. Apple's down so much more than Nasdaq and so on and so forth. So I definitely wouldn't want to put a blatant statement on your trading through that when you're looking at trying to get ahead in the markets because as I said before, just because the S&P goes down one day doesn't mean like for example, all right, great example right now, the S&P 500 as I'm doing this session for you was up almost 1%. And if I look at my stocks here, look at all these red stocks, look at all these stocks through here. So there was 35 stocks. There was 35 stocks that were actually red in the markets, right? And each stock has their own patterns, which means each stock is in their own cycles. Each stock, just because the S&P 500 is going down doesn't mean the individual stocks are going down and so on and so forth, which they're not, right? Like, look at, there's a lot of stocks through here, right? Even eBay, right? eBay looks a lot different. So every single stock looks different to the S&P 500. So if you're going to trade based on what you see on that individual stock, based on a trading plan. Meaning, if you get a good bullish setup, then trade that setup through there. Netflix will drop 1 to 2 at the open usually. 1 to 2% at the open. What do I think about oil right now? I think oil is due for a nice significant pullback. If I look at oil, what do I think about oil right now? Well, I'm looking at oil as I speak, and the daily chart has been dropping down quite a lot in the markets. You can see through here that we've had a big drop down through here, and we're getting very, very close to some sort of a significant actually, no, you know what? We actually got to that low point. That's why we bounced off there. Fun enough that. So now we actually got back down to the low point, never get a bit bounce. So we're probably likely to get a bit of a bounce or a bit of a short-term rally to the upside on oil. So oil was definitely in a big, strong downtrend. So I wouldn't be too surprised to see a nice little bear market correction out of this one, and then a continuation in the markets through there. John provides a lot of free material, include the Grab the Market free book course. A naked chart is also the sign of a pro. Just need the price, pattern, and volume. Exactly. That's Mr. Bling Mr. Bling Bling 007. Exactly right. You know what I mean? Like, that's what it's all about. It's all about what the market is telling you, not some indicators. That there's divergence right now and the market keeps going down. Or there's divergence right now and the market keeps going up. It's like, don't be fighting the market. Trust me, guys, for so many years, probably for a good close to 10 years of my trading career, I used to use indicators. I used to use indicators all the time, the stochastics, the MACD, and all this sort of stuff in the markets all the time. I used all these indicators. The reason why I don't use indicators right now is because so many times I'd get a very nice bearish trade. The chart would tell me it's a nice bearish trade, but the indicators were oversold, so I shouldn't take it. And it'll be a nice profitable trade. I'm like, what the hell? Or I'd look for a nice bullish. I'd have a nice bullish setup on the chart, but then my stochastic was overbought. And then that bullish setup went for a 10% run. I missed out on a 300% return on my option. And the stochastic stayed overbought for the whole time. It just confused the crap out of me. And ever since I removed that, and it took me a while. I used to trade with the MACD, stochastics. In fact, if you go back to see my old videos, I used to trade with 2 stochastics and the Bollinger Bands and like 3-4 moving averages. It was nuts. Absolutely nuts. So, and the more that I've removed from the chart, the better my trading has got. So that's the reason why I don't use indicators in the markets. Harish, why do you like GDX? Can you explain the technicals? I don't like GDX. All right, I must make this very, very clear right now. Is I don't like GDX right now. Harish. All right, I don't like it right now. I'm not saying I'm going to buy it right now. Okay, very, 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 very careful what I'm saying here right now. I'm not saying I'm buying GDX right now. I'm just saying that overall, over the next, say, 6 months, we could be getting ready for a nice move to the upside due to the fact that we've seen a lot of sideways movement. And Harsh, what I was saying before about that is whenever we get a market that generally goes sideways for quite some time, this is called the calm. This here is called the calm, when the market does very, 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 very little. This is almost 2 years. And when you have the calm, which when the market does nothing, goes sideways for like quite some time, and then we get a bit of a breakout. That's when the storm, i.e., the big move, is like going to happen. So understanding the calm before the storm is so critical in understanding the markets and what's likely to come in the markets. And think about this as understanding the calm before the storm is like an energy field, right? Like it's like an energy, is that the longer we go sideways, the more energy it's built up. And the longer it just goes sideways, the more energy it's built up. And the longer it goes sideways, just like we saw with Bitcoin, what happened with Bitcoin? We got a breakout and then we had a big move down, didn't we? Like a very quick move down out of Bitcoin after that, right? So when the market's going sideways, it's building energy. And the more time we go sideways, the longer the energy it's got. And then when we break, that's like releasing energy in the markets. So what I was saying is that if we start to get a break to the upside, actually, you know what? The fact of the matter is we actually may get a break to the downside on GDX, like a big strong break, and then we may be going for a bit of a run to the downside. I don't know where it's going to break, but wherever remember, this is a weekly chart too. By the way, guys, this is a weekly chart. This is over 2 years right now of almost sideways movement here on this chart. So when we do start to get a break, if we do get a break to the upside, and we start to get some sort of this could be the start of a very nice. It could be straight up like that, a very nice move up. Which means that that the whole calm before the storm. This breakout here could mean it could go up for 3 months if it goes really, really quickly, or it could be a 1 to 2 year move. I don't know. So that is what I call understanding, and this is about understanding the charts, right? This is understanding the charts here. The chart is the king. So this is whenever you hear people say the calm before the storm, that's all it really means. And think about it, when the market goes sideways for quite some time, it's building energy. So when it breaks, we have a lot of energy. That's where sometimes you'll see the market go sideways, and then suddenly it'll break and it'll go boom, like one day it'll be a big up bar. That's because now it's releasing all that energy. And sometimes that up bar is way too big and so on and so forth, but I won't get into that. But that's how you understand that's how you understand the price, understanding the calm before the storm. Bear trap for sure. Gold will break to the upside as people hedge in, of course. Michael, you may be right and you may be wrong, but right now, my friend, it is going to the downside. And so until that happens, you're fighting the market, because the market is going. We have more selling sign in the markets overall than that. So your thoughts is that may happen, but do you realize in 2008, when the whole market came down in 2008, you realize gold went down as well too, right? People don't realize this. So when we're looking at gold here, will gold pull back when the stock market pulls back? People say no, because it's a hedge. Well, let's actually go back. Let me go back to say my gold chart here for a minute. And let me bring up, say, a monthly here, so I can go back in time to 2008. Let me take everything off the screen here. This is the GLD here. But look at this here, right? Look what happened here. Yes, gold did go for a run at the start of 2007. But look at this here. We actually had a pullback. So a lot of people saying, well, gold's going to go up because the stock market's going to go down. Well, the stock market went down in 2008 and so did gold. So if you're thinking, if you're thinking, well, gold's definitely going to go up because what's happening in the markets as a hedge, don't have a blatant statement on that, because it may not be the case. It may be, again, we don't know. But if you're saying, well, this is what everyone's telling me right now, so it must be true, so therefore I'm going to get into it. Yes, we did get a bit of a run, but we got a pullback through there. Okay? Yes, we did get a bit of a run, and the same for silver as well too. What did we get on silver? Look at silver, right? Silver got absolutely hammered. Yes, it did go for a bit of a run 2007, but look what happened with silver. Like silver actually, it ran up to the start of 2008 and then it got hammered lower than it did for the last couple of years. And then we went for a bit of a bull run. So if people say, gold and silver is going to go up because the stock market's going to crash. The stock market and gold and silver can come down together. So please don't be placing trades based on gold right now because you think gold's going to explode because the stock market's going to crash. Because that may not be the case. Again, we don't know what's going to happen. That's why you always want to just trade what you see, not because you think or hope that the stock market's going to crash or gold and silver are going to explode. So as I said before, right now, right, people saying right now when it comes to gold right now. Okay, when it comes to gold. Yeah, this is the silver right now. When it comes to silver and also gold as well, right? People are thinking right now, as I speak, that when we're looking at gold, people think, oh, well, gold's going to go up now because it's going to be a hedge. To me, when I'm looking at that, this is all I see, right? Actually, let me bring up the gold chart itself. Here we go. Here, this is the gold chart itself. So if the stock market's going to start to see a big move down in 2009. We could see a move down. We could see a move down in gold as well too. Right, guys? So please don't be putting a blatant statement on this by saying, and I don't want you to be getting into gold right now because you're hearing people saying gold's going to explode because blah, 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 blah. It's like, guys, look at the facts for what it really is. Right now, what I'm seeing on gold right now, what do I see on gold right now? Is I'm seeing the gold making a lower low. This could be some sort of lower high through here. And if the stock market is going to go see a bit of recession in 2019, we could also see a bit of a pullback in gold as well too. And then we might see a bit of a run to the upside. So please protect yourself, guys. Question everything you see. Look at the truth. Okay, if the stock market's going to crash, does that mean silver and gold are going to crash? Or the silver and gold are going to get pulled back? Please protect yourselves, guys. Be smart about the way you're trading these markets. And as you can see, right, everything is in the charts. If the stock market is going to crash, if the stock market's going to have a bit of a pullback in 2000, right now, then gold and silver can pull back with it. Okay, guys? That's why you always want to trade what you see, not what you think, hope, or fear. Always trade based on what you see, not what you think, hope, or fear. Because gold right now, we create a lower low. This could be just a significant rally to hit the resistance, and then overall we could be getting a pullback with the stock market this year. So I hope you can see this, guys. Okay, I hope you can see. This is the reason why I always say the truth are in the charts itself, not these indicators or not these. And guys, question everything. Question the things that I tell you. Or I tell you the truth because I've been through hell and back with these markets, guys. And that's the reason why I sit here and talk to you about this here. But don't be putting blatant statements on everything that you see in these markets. Don't be putting blatant statements on everything that you hear in these markets or out there in YouTube, because it can lead you down the wrong path. It can lead you down the absolute wrong path in the markets. And it's just like, oh, well, again, don't look at me as the expert. I've just learned the simple things to focus on in the markets. Don't look at anyone else as the expert. Look at the charts, learn how to read the charts, and then question it. Okay, if that is true. All right, if that is true, then, if that is true, then let's actually go check out the facts here. So, yeah. I've been accumulating for long-term gold, silver, and Bitcoin. I don't know why you've been doing that for long term, Michael. I don't know. For me personally, if you want to start to get into an investing position, because obviously you're looking to make money, you're looking for a return. Your best probability is to accumulate when the market starts to turn around, because we can be getting ready for another drop to downside. And why are you loading up on Bitcoin for? What is Bitcoin? Bitcoin could be nothing. Bitcoin could be, again, it's like, it's like big, when, will the question you got to ask is like, will Bitcoin be around? Will Bitcoin be around in 5 years from now, in 10 years from now? A lot of people say yes, a lot of people say no. But let's have a look at the facts here for a minute, okay? When we're looking at Bitcoin, what are we looking at with Bitcoin, right? We're looking at just something it's a crypto that's connected to the blockchain. It's not the blockchain, but it's connected to the blockchain. Now, let's actually bring that back to say something like back in the tech boom, right? There was so many in 2000. There was so many tech boom that went through a tech boom because of the internet, right? And then we went through a tech bust. A lot of those companies went out of business, and then there was only a few left over. Which one of those few is going to be left over? Because we're going to see probably 80% of these cryptos go to zero, and there's only going to be 10% of them left over that's going to go for a big bull run. It may not be Bitcoin. You got to accept that fact, guys. So, wait for the market to at least turn around. Wait for those charts to at least turn around for you to tell you that we're now likely to start going through an uptrend instead of a downtrend. That way you have some sort of a probability of this thing now turning around. Wait for that first. Because you don't know. These things could ultimately go down to zero and just completely just expire. We don't know. Okay? So yes, just like the tech bubble, will Bitcoin be around in 10 years? Just like the tech bubble, with the internet, 80% of the companies went up and went down and expired. Just like crypto right now, it's not the blockchain will be around in 10 years, but whatever cryptos that are connected to that, like XRP is supposed to be a much better crypto because it can do things faster and so on and so forth. In that. So, it seems like what Bitcoin was supposed to do, a lot of these other companies can do 2 or 3 times faster. Again, I haven't looked into the research into stuff like that. I just trade what I see, not what I hope for, and so on and so forth. So will Bitcoin be around in 10 years? I don't know. But when we're looking at Bitcoin right now, it's it's definitely a question mark through it. So I definitely want to be just buying Bitcoin and just buying and buying and buying and buying and buying and buying because you think it's going to go for another big bull run in 10 years time frame. Heck, Bitcoin may expire and then XRP may be the next dominant one in there. So just be smart about the way that you're looking at these markets here. Gold and silver feel a little like this rally will fail like the others. Maybe, Chris. What about complex inverted head and shoulders since 2014? That may be the case there. That may be the case, Chris. But that may be the case. But whatever's happening right now is more important than what happened over the last couple of years. And yeah, what we're seeing right now in that there. What criteria have to be met for a trend to be considered a reverse? Simple, higher, high, higher, low. If you're trying to understand the trend, it's simple things. If the market's going down, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. If the market is going down into a downtrend, then obviously the market's down. But if it's gone to reverse, like this is how you tell the trend. If the market comes up, now it's made a higher high. If it comes back down, now it creates a higher low. We've now changed trends. As the market goes up, stair steps higher. The sellers were lowering the prices, higher high, higher low. Trend has changed. Higher low. Buyers are raising their prices. Oh, look what happened. The market broke a low, ran up lower high, and then we changed trend through there. So it's all about looking at the lows. So this is how you determine the trend in the markets, is by looking at these here and looking at all these different things through here and looking at all the different things from there. So we may even get something where the market We may even get something where the market actually comes, where we have a, let's take everything off the screen here for a minute. And we may even get something like if the market makes a lower low, lower high, and then it runs up, and then it doesn't make a lower high, but it creates a higher low, and then changes. So now we had a higher low breaking past previous highs, which is an upward trend. We may get a move like this, comes back down, creates a higher low, then fails, and then comes back down. Lower high, breaking past previous lows. So that's how you tell the trend in any market and whether we're likely to see a reverse in the market. So it's a really cool thing, really cool tool to help me understand who's in control right now. A buyer's in control, a seller's in control, or there's no one in control. Alrighty guys, well, thank you for coming around and sharing this with me. This has been amazing. This has been absolutely amazing. This is over an hour now, guys, of chock full of content for you guys to help you guys out. And once again, a shameless plug. Make sure you guys go over to mastertraderlab.com to grab your free trial to the membership area, plus access to all these free bonuses as well too. mastertraderlab.com. All right, guys, that's it for me today. Have an amazing day, and I will see you next time.